Happy New Year, everybody. This is Scott Welsh. And as you know, we get together every week to talk about beating the market. And the year has ended. We've gone through an entire calendar year, so we can really get down to the nitty gritty. We've got some facts and figures so we can talk about what beat the market very definitively. But first, as I mentioned, Happy New Year. It was not a great year for Stanley, but I'm looking forward to 2019, right? I think we all are. All right, three things today. Number one, it's a new year. What does that mean? Well, it's kind of arbitrary, right? We made up our own calendar, but instead of being arbitrary, we're going to make it useful and we're going to make this a time to look back. It gives us a mandatory breaking point. Well, not mandatory, but you know what I mean. A breaking point to look back and say, okay, this went right, this went wrong, let's make some changes. Now, we also need to discuss what matters and why we trade, right? That would be fairly important to consider moving forward. It's part of our speculation. And then we're going to look at what worked. Well, what did work in 2018? It was kind of an interesting year. Of course, a disclaimer, we're going to talk about numbers here. They're all hypothetical numbers. Please do not risk anything you cannot afford to lose, and read that from beginning to end and memorize it. All right. There's a lot of minutia. There's a lot of things that can distract us. Let's stay above that. And let's talk about the big picture and then break it down into what worked, what didn't work, and what we might do going forward. For many, many traders, as the year ended, 2018 was not great. Okay. First of all, trend followers really suffered. Big, huge, famous trend following firms did not like 2018. What does that mean? Well, if they're trend followers, that means A, no trends, or B, violent trend up, and then reverse back down. Violent trend down, and then reverse back up. That's not good for trend followers. You need one trend going one direction for a while. And clearly that did not happen in 2018 for people who trade big charts, right? Trend followers trade daily charts, even weekly charts, usually long-term charts, and there just weren't any sustainable long-term trends. For the major firms, look up the numbers, and I'm going to give you some numbers. You'll find not great. The market really suffered. The S&P 500 took a nosedive in December. Were you watching? Do you care? Do you trade stocks? Are you even interested at all? Do you trade S&P futures? Wow, December was down, down, down. Now, I do not trade stocks or futures yet, so I was not psychologically or even monetarily involved in the drop. Didn't mean a whole lot to me being a Forex trader, but if you were a stock slash ES trader, maybe, that was not great. Not great, great, great. Down, 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 especially you were long. Now, for some reason, you were short, which I don't know who was short going into December. Do not know anyone who said, it's short. Didn't hear that, didn't read that in the articles. But if you were, of course, it was a great December. So this does not apply to you. Now, usually day trading systems are not affected by these big macro environments, right? The market goes down. That usually doesn't mean a lot on a 5 or 15-minute chart. Yeah, there's a trend and maybe it's easier to catch trends. But when you're dealing in 5 and 15 minutes, is like you can't see the forest, right? You can't see what's going on above us. However, my day trading systems were going along doing just fine. And in the beginning part of December, wasn't even affected at all. The market started going down and didn't notice it. And then all of a sudden, even in day trades, it got really twitchy towards middle end of December. Got in a trade and then violently went the wrong way, or it went sideways for way longer than normal. So this, whatever was going on, whatever the reasons were, the macro environment, it fell down. And day trading was not fun in December 2018 either. Okay, so what does all that mean? It's this market seemed to have hit a bunch of different methods of trading. So what do we do about that? Well, after you take a beating, after you see your day trading systems lose trades, after you see your stock market portfolio go down 20% or more, it's easy to just get angry or scared or panicked. And when those emotions come a calling, it's easy then to change out, not day trade anymore, not trade your robot, not trade stocks, not do anything, or change dramatically. Okay. And this could be a very bad idea. What do they say? I'm not big on cliches. Hopefully, you know that by now. But one I've found to be true is that just when you're getting ready to give up, things change. And just because there was a beating toward the end of 2018, you need to really examine. I need to really examine what happened to see where we're at. Because making a change based on emotion and short term panic, not a good thing to do. We need perspective. Okay. Seeing losses or ending the year with a loss in your account, that's overwhelming. Trade for a year and you have less money than when you started. That's weird, right? That's a weird thing about trading. If you have a job, you don't work for a year and then all of a sudden, no, we're taking away all that salary plus a little bit more. It's just trading's just a weird thing. It's a great thing. It's a weird thing. And seeing a year end and your trading account is lower, that can be a gut punch. But we need perspective. Yes, it was down. Why? Because maybe being down is not that bad. Maybe, to use sports analogy, a loss is not that bad. What if you were 15-16 on your pro tennis career for the year, losing record, but you had a bunch of close losses. You almost beat the number 5 player in the world. You made a couple finals late in the year. Nothing to get upset about, right? Maybe your losses were at the beginning of the year. See what I mean? You can not make the playoffs. You can have a losing year and be very, very positive about it. It just depends on the perspective. So let's have some perspective on what we're trying to do here. At least what I'm trying to do. Maybe you too. What is the goal of our trading? Well, we want wealth accumulation, right? Done. Okay. What is the number one wealth accumulator in history of mankind and womankind? And that is the stock market, right? The stock market grows from 5 to 8%, depending on when you start and how long you look back, 5 to 8% per year for the last 100 billion years. If you just get involved in the stock market and stay in the stock market, you're inevitably going to be rich or at least have a lot more money. Okay. So the goal then is just buy an index fund. And that leads into my least favorite argument of all time, which is just buy an index fund and that's it. But that's where we begin, because the longest running successful method we have is just buy the market and hold it forever. We're guaranteed to average 5 to 8% per year for 100 years, for as long as we trade, for our lifetimes. Pretty good deal. Doesn't mean it's easy, but it's a pretty good deal. That's the basis. But what if we can do better? What if we take the philosophy of it's going to average 5 to 8% indefinitely, and we do better than that? Now we've taken the greatest wealth accumulation machine of all time and improved it. That is a good thing. Now, we're talking about the stock market. Doesn't mean you have to trade in the stock market. You could trade Forex systems, future systems, options, whatever it is that you do. The point of all of this should be, in my opinion, to beat the market. If we make 100% a year, fantastic. Keep doing it. Love to hear about it, right? But we just need to beat the market. That's really where we're at. If we can be an accumulation machine at a rate better than the market, not only are we among the best traders in the world, which is cool, because most people do not beat the market, 90%, 96% don't. How would you like to do something in your life and you're better than 96% of the people doing it? Pretty fantastic. But we're also getting on board this wealth accumulation machine, this ideal, without necessarily using the stock market. Use it if you want to. We're taking that fundamental and improving it and making more money and changing lives. Okay. Again, the experts say just buy an index fund. You can't beat the market, just be the market. What if we can? That is a worthy goal. It's a goal that accumulates wealth, and makes our lives different. That's what we're trying to do in these videos. Find a method to beat the market. All we have to do is beat it every year. If every year we beat it, guess where we end up? Beating the market, having more wealth than what we would have had doing something else. So let's look at the stock market in 2018. Remember the 1st of December. Up until December, this was the longest bull market in history. Are you aware of that? I wasn't aware of that right until earlier this year or last year, 2018. I wasn't aware that this bull market, which define a bull market, again, it's a little bit vague and that's annoying. But anyway, usually there's a correction within 10 years or so, 8, 9 years or so. And this bull market has gone 10 years and plus 10, right? 2008, that's actually closer to 11 years. So this bull market has been the longest one in history. And before December, who was saying it's going to stop? Answer is no one. This is just the way it is. We just have bull markets now for 50 years. There might have been a few people peeping that it's overbought, maybe, but they were hard to find if they existed at all, right? So we're in November, everything's going great. The market was up nicely for the year again, as it's been for the last, decade. And then it happened. Mean, meet reversion. Reversion, meet mean. Mean reversion. Isn't that clever? The stock market reverted back to quote unquote fair value. It actually went all the way back. I have a way of looking at fair value, and it's actually come all the way back to almost nearly fair value. It was due, in other words. Why didn't it happen earlier? Who cares? But it was due. It came back to earth. The bull market ended, and the market finished negative 6.24%. That's your number. Okay, great. That is the number. We're down 6.24% for the year. This is the vehicle that every expert says we have to employ if we want to get rich. Our get rich mechanism lost 6.24%. So, pause for dramatic effect. What does that mean? It means if we just did better than that and can keep doing better than that on a yearly basis, we're going to get wealthier than the experts ever thought we could. That's the goal. That's the benchmark. That's the number. Any other number, make this, make that, 100% in 4 days, all of that's great, but that's all conversation, window dressing. We're talking about long-term wealth accumulation here. Quit your job, retire, money for you, money for your family. To do that, we know the stock market can do that. We know it can. We just have to do better. So there's our number. If we do better than that, we change our lives. It's a worthy, important goal. That's why I do a video every week. So what did beat the market? We know the number now, minus 6.24. What did better? Well, as we kind of mentioned, major trend followers did not. They absolutely didn't. You look at Dunn Capital Management. I've written about it. I've talked about it. In my opinion, and I can make a pretty good argument that probably no one can beat, that Dunn Capital Management and its founder, Mr. Dunn, might be the greatest trader of all time. Maybe better than Warren Buffett. Maybe better than anyone else. Looking at 30, 40 years on this track record, and they've accumulated returns over that period that are astounding and consistent. They are the benchmark of an automated system, and they happen to be trend followers, right? I said automated. They don't make discretionary decisions. They have a system. They stick to it, period. Dunn is the best and the longest, in my opinion. Pretty much inarguable. Dunn got clobbered. The final numbers aren't out yet, but it was, as the last number you can see, is over 20% down for the year. Chesapeake is my other favorite big trend following firm. Why? Because the founder was an original turtle and still trading 30 years later. They have a great track record over multiple decades. This was an original turtle, which really hasn't changed his methods. When he was a turtle, he made 100% per year for 4 years. That was his average, according to him. This is a big time, super excellent trader. And he was also down, depending on which fund, between 4 and 9%, either 4% or 9%. Also down. Two of my favorite, two of the best in the world, got clobbered in 2018. Now, I can look that up, I can do the research, and I can give you the numbers. But I don't really know that for a fact. I mean, what if they just put out, I don't know why they put out those bad numbers, but maybe they did. So if we're going to talk about what worked in 2018, I'm going to use something I've seen with my own eyes. That's what I know. That's what I can speak 100% confidently in. Stuff that's traded with real money in the market. Results have been recorded. I've seen it. I was there. So now we're going to, yes, we have those trend following numbers from Dun and Chesapeake, but we're going to look at and analyze quickly what worked style-wise in 2018. Now, three things I traded live and recorded all the results. Traded the Breakout, which is trend following long term, Heron day trading, and Hornet, which is also a day trading robot. Okay, let's take a look. First, let's talk about Breakout. Breakout is on daily charts. It's trend following and portfolios. Trend followers would tell you need to be widely diversified. I don't know if I agree, but probably they're right. I mean, they've been around for 40 years. Nonetheless, my live Breakout portfolio was only the euro dollar and dollar yen, Forex. I use trend following on these two Forex. Now, if I had just traded the euro dollar, yay, I would have been up roughly 11% for the year. Trend following is awesome. Doesn't trade a lot, but it did catch a few trends before they reversed, and life was great. The dollar yen, on the other hand, was not great. Stuff tried to break out and then immediately got into profit and then immediately reversed for a stop out. And it happened a handful of times. Whoopee. So even though I could just not talk about the dollar yen, I trade them together, so I consider them one thing and add them up. They were down 3%. Well, that's great. That beat the market, which is interesting, right? That's perspective. I could make up a marketing pamphlet and send that out and say, my system beats the market by a minimum of 3% every year. Who would sign up for that? Maybe a lot of people, depending on what kind of marketer I was. But the bottom line is it lost money. I mean, who wants systems that lose money? Does trend following lose money? Of course it does. Trend following will have losing years. That's part and parcel of being a trend follower. So it's a little bittersweet. Beat the market, which was what it was designed to do, what historical research showed it would do. But still, I have less money in that account than when I started. Not by much, better than the market, but still down. Now, let's get to the day trading quickly. The Heron is a day trading robot that I sell. I don't usually talk about stuff I sell. I apologize. But again, I'm only talking about things I know for sure. It's day trading, 15-minute chart, tries to go with the trend and get in on a pullback. Well, if I said with the trend, we already know that's kind of trouble because the trends were sketchy. However, despite a December that was blah, meaning terrible, no fun at all, it finished up 5.9%. How do we look at that? Perspective. That absolutely killed the market. Anything out there that beats the market by 11 or 12% should make me a millionaire. I should go door to door and say, my system beats the market by 12% per year. Give me all your money. I should. However, in my trading account, it's only up 5.9%. It's under its historical average, but yet it's way better than the market. Perspective. The Hornet is my other day trading system. I do sell it, but only to lifetime members. Sorry for that. Just telling you, this is what I know. Very up and down all year. Started fantastic, went through the summer horrifyingly bad, just down, didn't trade at all, and when it did, it just went, I mean, months of just, Then it got on a hot streak, and then took a loss. It got another hot streak, way up and down. The dollar yen, which is what I traded on, was all over the place. But it finished the year up 11.97%. Do I want more? Of course. But did it kill the market? Yes. Again, what could I do with a system that beats the market by 18%? Could I be a millionaire? There's the perspective. I want more. You can't really. Could you quit your job at plus 5.9% per year or 11.97? Maybe if you had $500,000 saved up. But if you had 10,000, 50,000, $100,000, you need bigger numbers than that. Of course you do. We'll hope that the next year bounces back. But the fact that even though it's not a lot of money, the fact that it killed the market makes me very optimistic. If you have a system that beat the market, you should be very optimistic. The takeaways from all this: I worked for years to develop strategies that I believe can beat the market. That's what the research showed. They did. All three of them did. I believe that the Breakout and the Heron and the Hornet should beat the market. They did. I didn't lie. It came true. Hooray. Very happy about that. I'm very optimistic about that. But they didn't make 1,000,000%. They didn't make as much as I want them to make. I'd love for them to do better. But the fact that they killed the market again gives me hope. Bottom line is, overall, we want a wealth accumulation machine. And we don't have to settle for index funds. We want to try to create an accumulation machine that's better than index funds for a lot of reasons. I think the premise of just being in the market, and that's the only way, is 100% false. The efficient market, I believe, is 100% false. I don't like limiting ourselves. I don't like dreams that are destroyed by saying, give up and join the index fund parade. Don't like it. I'm angry about it. It's my axe to grind. People's lives are on the on the table here, right? If you make more money, your lives change. I want to create things that make more money than index funds. We can do better. Perspective, once again, if you beat the market with your system, you should be very optimistic. No reason to change. Don't look at something that only made 5% and say that sucks. That's terrible. The market was down 6. You did great. Chances are you only made 5 or 6%. Next year is going to be a big year. Maybe not, but that's what logic and the math would dictate, right? If you did way better, if 2018 was a banner year, which would be fantastic to hear about because you see that all these different styles did not have a great year, please let me know. I love hearing about your success. It's only been 1 year, but I think there's a lot of perspective and important numbers that we've gained by looking at how different systems did in 2018. Looking forward to 2019. Hopefully you are too. You can join the email newsletter. I'll be talking more about strategies that worked and strategies going forward, so get on the email list. I've been using this YouTube channel to just talk about what's in my newsletter. Probably going to stop. The YouTube channel is I'm going to talk about whatever I want to talk about. I don't like just talking about the newsletter, so YouTube channel's changing. That's just the way it goes. And there's all the contact information. All right, Happy New Year, everybody. I'll be back next week once again with more stuff. Looking forward to it. Talk to you soon.